situation is clearly very fluid at this moment. If you sort of go back to history, as you said, I mean, going back to 1990s, I mean, there have been sort of in the periods of geopolitical spikes, we have seen generally kind of Asian markets underperforming. Although if you sort of look at the 2014 Crimea episode, the Asian markets did well. I mean, this time I think obviously we'll sort of have to monitor it closely, how much time it takes. But one of our strong views, is that we think Asia should fare better in this episode because in general the fundamentals are much attractive. I mean, we got sort of valuations which are at 20% discount to the global markets. We got positioning which is much more cleaner in the region because foreigners have sold a lot, and earnings are on the margin are built better than the developed markets. So we think Asia should generally be able to do better. And in particular, I would say, I mean, the two markets which we are really excited about is one, China, and we can talk about that more. But in general, the fact that China is still easing policy and valuations are inexpensive. And in general, if you look at the China-Asia markets, they're very less correlated with the developed markets. So in the period of global volatility, we think Asia should be able to do much better. And the other area, I would say ASEAN, that's something we have taken a much more constructive view heading into the year, generally because of the fact that you are going to see a big boost to the growth because of the reopening. But at the same time, there is a large part of financials which are in the indices, which should generally do better in the environment of firming rates. But on top of that, ASEAN is also a market which is generally underowned. It's been chronically underperforming over the last 10 years or so, and it is generally less correlated or has a lower beta to the global market. So in this kind of geopolitical turmoil, we think both Asians and the parts of ASEAN, notably Singapore and Indonesia, should be able to do better. And so a combination of these factors, we think Asia should be able to withstand the storm in this particular case a little bit better.
Sunil, got to ask you, I mean, timing, this is usually pretty difficult, if not impossible, although
right.
A lot of people think that last week when the S&P hit 4,100 or so, that was a low for the year. Do you believe that's the case, and are we talking about a run back in the next 3-4 weeks, or?
Look, I mean, there could be sort of more volatility in the markets, especially given you're seeing oil prices spiking, which obviously should put pressure on equities in general. And obviously there are concerns about kind of the tightening cycle of Fed. And obviously the market is also kind of sniffing out if this has any material impact on growth, because I think the main worry for the risk markets here is if we see any material sort of downside risk to the growth numbers. And so I think we sort of need to closely see if the markets do stabilize here. I think on a more sort of a full year basis, if we sort of ride the underlying earnings, the market should be able to post decent gains for the year. So specifically for Asia, where we are kind of expecting close to 9-10% earnings growth this year, we think the market should be able to post somewhat kind of low teen returns for the full year. So I would say, I mean, near term, I think there would be continued volatility, but if you sort of look past that, the market should be able to post gains on the back of strong earnings.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.